Hello there. Are you sitting down? Good, because today we are going to talk about something that makes my blood pressure spike: monthly subscription fees sneaking into your bank account under the guise of saving you money. Now, I want you to listen to me very carefully. If you are retired, or if you are anywhere near that glorious finish line called retirement, your financial playbook changes completely. When you are working, a $10 fee here or a $20 subscription fee there might feel like loose change under the sofa cushion. But in retirement, you are living on a fixed income. Every single dollar that leaves your pocket needs a passport, a background check, and a damn good reason to go. So today, we are talking about an app that thousands of people keep asking me about: MoneyLion. Specifically, we are pulling back the curtain on the MoneyLion membership. You've seen the advertisements on your phone or on TV. They promise cash back, early paychecks, credit building, and easy borrowing. It sounds convenient, doesn't it? It sounds modern. But is a MoneyLion membership actually a smart financial tool for a retiree, or is it a money pit designed to nickel and dime you out of your hard-earned nest egg? Let's stand in our truth and look at the actual numbers. First, what is MoneyLion? MoneyLion is not a bank, and I need you to hear me on that. It is a financial technology platform, a fintech app that bundles together checking accounts, cash advances, investment features, and credit-building loans. To get access to their full suite of perks, what they call their MoneyLion Wow or MoneyLion One membership, they charge you a monthly subscription fee, typically around $9.99 a month, or up to $19.99 a month if you're using their Credit Builder Plus tier. $10 to $20 a month. You might sit there and say, Susie, it's only $10. Stop it. $9.99 a month is $120 a year. $19.99 a month is almost $240 a year. Why are you paying $120 to $240 a year to access your own money or build credit, when traditional, FDIC-insured credit unions and banks will give you high-yield savings accounts, fee-free checking, and legitimate credit tools for $0 a year? It makes no sense. Let's break down the main features they push, starting with the big one that frightens me the most for retirees: their Instacash cash advances. MoneyLion allows you to take out small cash advances up to a few $100s against your next deposit. They tell you there's no interest. Sounds great, right? Wrong. If you want that money delivered to your account instantly because you're in a pinch, they charge you what they call a turbo fee. That fee might be $3, $5, or $8 depending on how much you take out. If you borrow $50 for a few days and pay a $5 instant transfer fee, do you have any idea what that translates to as an annualized interest rate? It is effectively over 100% APR. That is not a financial solution, my friends. That is a trap. It creates a cycle where you are constantly borrowing from next month's Social Security check or pension payout just to cover this month's groceries. If you are in retirement, you cannot afford to live in a cycle of borrowing against your future self. Now, let's address the fear that drives so many people to these apps: credit building. Many retirees tell me, Susie, I paid off my mortgage, I paid off my cars, but now my credit score dropped because I don't have active credit accounts. Or maybe you had a tough couple of years and your credit score took a hit. You see MoneyLion's Credit Builder Plus membership for $19.99 a month and you think, this will fix my credit. Listen to me. MoneyLion's Credit Builder works by taking out a small loan, say $500 or $1,000, where part of the money is held in a locked account while you make monthly payments, which they report to the credit bureaus. You are paying a $19.99 monthly membership fee plus interest on the loan itself, which can range anywhere from 6% to nearly 30% APR. Why on earth would you pay a monthly subscription fee and up to 30% interest just to build your credit score? If you want to rebuild your credit in retirement, here is your actionable, zero-cost takeaway: walk into a local, reputable credit union. Ask them for a secured credit card. You put down a small deposit, say $200 or $300, and that deposit becomes your credit limit. You buy a tub of butter or a tank of gas once a month on that card, pay it off in full when the statement arrives, and you pay zero interest and zero monthly subscription fees. The credit union reports your perfect payment history to all three major credit bureaus, and your credit score goes up safely, cleanly, and without draining your wallet. What about the other membership perks MoneyLion advertises? Cashback rewards? Travel protections? Investment accounts? Let's be real. The cashback benefits require you to spend money to earn pennies back. In retirement, your goal is not to spend more to get 1% cash back. Your goal is to preserve your capital. And as for their managed investment account, while it is convenient, they charge administrative fees on small account balances. Why pay an app-based fee to invest when established financial giants like Fidelity, Schwab, or Vanguard offer high-yield money market funds and zero-cost index funds with world-class customer service, robust fraud prevention, and real human beings you can call on the phone when you have a question? When you are retired, customer service and security are paramount. First, take an inventory of every single financial app on your smartphone. If you are paying $9.99, $14.99, or $19.99 a month for a fintech membership that you don't absolutely need, cancel it today. That is instant money back in your pocket. Second, if you need a safe home for your retirement cash, open a checking and high-yield savings account at a federally insured bank or credit union that charges zero monthly maintenance fees and has no minimum balance requirements. Third, if you need emergency cash, do not turn to fee-based app advances. Build a dedicated emergency savings account in a liquid high-yield savings account that holds 8 to 12 months of your essential living expenses. That is your ultimate buffer against life's surprises, not an app on your phone. You worked far too hard for far too many years to let monthly fees chip away at your financial security. Be strong, stay smart, and stand in your financial power.